Want to say welcome, everybody. I'm Cody Jernell. Over the next 30, 45 minutes, I'm going to help you figure out which real estate investing strategy fits you best, your lifestyle, your capital, your time, not the one that you heard on TikTok or Instagram, the one that actually works for you, not for somebody else. So even if you're never done a deal before, even if you feel like you've made mistakes in the past in the real estate investing game, even if you feel stuck right now, maybe you've got a few deals under your belt. By the end of this training, I hope that you'll know exactly how to move forward with clarity in your strategy. So, believe it or not, I did not come from a real estate family or a wealthy one, really, at that. I was a D1 athlete who thought football would be my whole life. But when that chapter kind of closed, I felt completely lost. Wandered through a few jobs. I was chasing paychecks, but nothing really lit me up like playing sports in the past had. And then one day, a friend handed me Rich Dad Poor Dad. We like to call it the Purple Bible because that's what most real estate investors start on. And that friend actually let me borrow his Audible account, and I was that broke at the time. But listened to it. I remember staying up all night listening to it, and then I listened to it again, and then I listened to it again, and it really shifted everything for me at the time. I suddenly saw the world through a different lens, one where I could start actually building wealth and not just chasing a paycheck, like I said, and earning a living. So that's when I got my real estate license, 2017. And in 2018, I bought my first rental with a cosigner. Thanks, Mom. And that one deal showed me what was possible. So fast forward now almost a decade later, and we've built a portfolio of over 50 plus units. Personally have closed on and helped other clients close on over 100, probably 200 plus doors at this time. And we've really built an infrastructure of service related real estate businesses to back it, which is the Haven Management Group you see here, which does our management, construction, and Gravity Real Estate Group being the sales that kind of back that part of the company. So moving on from there, wanted to just go through a few recent deals that we're doing. So it's one thing about this group is we're all actually real estate investors. This isn't just a coaching program or mastermind where we're teaching you how to do it. We're actually in the trenches doing it as well. So right now, we actually just got pictures done at this first one you see on the bottom left. It's a fix and flip in Parisburg. We'll go into that one a little bit later, but bought that deal, off market from somebody in our network, put about $75,000 into it over the last 4 or 5 months. And we're about to list that at 209,000. We're going to take it to market. It's a 3-bed, 1-bath, about 1,300 square feet. This other project you see in the middle is a row of Radford townhomes that four or five of us in the Haven group bought a couple years ago. It was a value add project, so we actually bought a bunch of 5 of these townhouses all at one time, and went in, added a bedroom, added a bathroom, turned them into 3-bed, 3.5 baths versus the 2 bedrooms that we had, and then we turned around and listed them individually, and have sold off the total 5 over the last 2 years. So we are actually closing on the last one next week, thankfully. So we really had kind of a 2-year timeline on that, and it did work out the way that we were planning on it. So that's always good. And then our other project that we've got rolling right now is a fix and flip in Narrows. You can see the beautiful open floor concept here on the right side. So we started taking off the siding on that one and realized that there was a lot more termite damage than what we had originally anticipated. We knew that had termite problems, but you start peeling back the onion, and these are the types of things you find. So one of the biggest things with those is having a contingency budget always in place. That's some of the things that we will teach when we start going through that type of strategy. But today is more of just a broad level. Here are the strategies involved. Let's talk about your goals. Let's talk about your, setting your why, and then figuring out which strategy fits your bucket. So I think it's important before we kind of jump into talking about the strategies, just going over a few of the false beliefs that I know kept me from making progress when I was early on in the investment game. And the number one, which is the most common, probably the most you know the biggest one is that you might not have enough cash to get started in the real estate game. You see all the prices of homes and people paying cash and just what it feels like you need to get into the game. And it's honestly it's always a lot less than what you think. So this is actually a picture of my first deal. Like I mentioned, I bought my license in 2017, ended up, buying my first property in 2018. So my first deal was a 3-bed, 2-bath. It was a single family house in Parisburg. I bought it at foreclosure for $81,000. I know that sounds crazy now, but it was actually livable. Um, had some plumbing issues. Everyone that I called and talked to about the house I don't know where they got the story, but they said that someone had dumped concrete down the lines and that's why the plumbing wasn't working. And I kind of let that slide by and decided I was going to make the leap of faith anyway. So at that point I had less than $3,000 probably in the bank. But used an FHA loan, got a cosigner, thanks again mom, and pulled this one off. I actually pretty much house hacked this one. Moved in, fixed it up with sweat equity. I lived there for about 6 months while I was taking care of a few things like the plumbing and painting, and didn't need a lot of work, but just some cosmetic stuff. And then after that 6 months, I rented it out to someone. I moved into a different property and leased that out for the next 5 years, and ended up continually raising rents over the time. And last year we actually sold that property for $208,000. So that was a very big return. But that deal initially gave me the confidence I needed to kind of keep pushing forward, jumping into new properties. And it really just it takes that one spark. And once you kind of get your feet wet, you realize, hey, this isn't quite as scary as it might seem from the outside. And I don't need $50,000 to get started. You just need that one strategy that fits your situation that helps you start building momentum into other properties. So the next false belief that I had, and I know a lot of people do that I talk to, is that you have to be an expert in one category and stick with that strategy. And every mastermind you see is like focused on flipping, or is focused on subject to, or this one's focused on that. But that's not always the case. And I'll share a story here. I mentioned I was a D1 athlete back in the day, a place kicker. And when I started working with real kicking coaches in high school, one of them told me something that really stuck with me, and that was to pick a strategy or pick one thing and be a master at it. So basically, he meant pick being a field goal kicker or pick being a punter. And so I chose field goals. I love the scoring points and the pressure and just kind of having the game on the line and everything. But my coach was right at the time. That focus, let me master that one piece of the craft. And it finally did land me a D1 scholarship, go Hokies. But what I didn't realize at the time was that at the next level, which is the NFL, they actually expect you to be able to do both at an NFL level. So there's no backup kickers in the NFL. If you've ever noticed, if the punter goes down, then they're expecting the kicker to step in and take over the punting duties. And because I hadn't kept learning and growing my skill set, I hit a ceiling when it came time to really hit that next level. So when I got into real estate, I kind of took a different approach, or real estate investing, I took a different approach. I focused on one strategy at a time. But I kept expanding my toolbox, if you will. So as I was implementing this buy and hold strategy, I was also learning about, how to do fix and flips, or how to do creative financing, or, how multifamily works and things along those lines. So now I treat real estate, like the picture here, more like a tool belt. You don't use every tool at once, but with different markets come different strategies. You can see here, when I started, the inventory level of homes were kind of in that medium range. It wasn't crazy environment like it had been the last couple of years, but interest rates were fairly low, and appreciation was rising, at a decent rate. So at that point in time, buy and hold really made a lot of sense. As we got into the COVID years, inventory got a lot lower, prices went up, and demand went up. So at that time, it was started looking at things like, oh, okay, well, if demand's really high, prices are really high, and we can still find good off-market deals. Let's start looking at fix and flips. There's some good margin there. The houses are going to sell faster. So we kind of, use a different strategy for that. And now in the current environment, we're at kind of a medium inventory level. The inventory is starting to creep up. You're starting to see price drops, and prices are inflated and interest rates are inflated. But rents are also up. So now if you look at the market, it might be a good time to start looking at some of these value add multifamily properties. You can't make quite as good of a margin on single family rentals, but there's still, rents are still high. Interest rates are still up there. But if you can buy something at a deep discount, do construction work, add value, rent it out, there's still really good margins there. So the whole point of that is just to say, don't be a one-trick pony. It's good to start learning, each sector of the real estate investing side. And then as you go find deals or opportunities present themselves, you can use your tools that are in your tool belt to make it work. So before we dive into just the different strategies that we've used, I want to kind of set the stage by hopefully by the end of this training, my goal is for you to walk away with four things. So first, some clarity. You'll have a much better sense of which investing strategy actually makes sense for you right now, based on your goals, your time, and your resources. Secondly, I want you to have a clear breakdown of the pros and cons of each approach. So you're not guessing or chasing, what everyone else is doing. You know what works for you. Third, I'm going to give you a few tools and checklists that you can use to take action on some of this stuff. You'll see in some of the slides, there's a bonus kind of tool or spreadsheet or something that we've made that you can use in each one of these strategies. So if you're not already in our network group, and I don't already have your email, make sure you drop that in the comments at some point, because after the call, we'll send all that stuff out to you. And then lastly, want you to know where to go next on this. So whether you want support, deals, or just people to learn with, learn alongside, you'll be plugged into this community that's actually out doing stuff and not just talking about it. So if you've been stuck trying to figure out where to begin, or you're stuck in your current situation, then you're in the right place. So that leads us to some personal reflections. I want to kick things off with kind of why we invest. So this is always important because when times get tough, and they will in this industry, I've had plenty myself over the last, 8 or 9 years. You'll need a solid why to kind of fall back on. It's what really keeps you going, but if you're picking between strategies or moving from this to that, you got some deals that aren't going the way that you thought they were, or just, family life and things get in the way of actually you hitting your goals, you need to have this why to fall back on. So for a lot of people, it's about escaping the grind, getting out from under a job or a boss that's constantly like draining your energy and you don't feel like you've got any traction or anywhere to go. For others, it's about really securing your future. So maybe making sure that your family doesn't just get by, but thrives. You want to provide more, and maybe you want to leave a legacy. So something that lasts long after you're gone, and you can hand over to the future generations to grow and to prosper from. Or maybe, like me, when I started, you're just really tired of feeling stuck. While someone else seems like, they're making all the moves and moving forward, I always felt like I couldn't figure out what that thing was to get me to the next step. So real estate, for me at least, and most people, is really just about building life on your terms. And with the right tools, you can make that happen. All right. So before you pick a strategy, you kind of have to be honest about, about your personal goals. Are you trying to make quick cash? Do you need steady monthly income? Are you playing the long game and you're focused on wealth building? Maybe you're after tax benefits if you're a high income earner, or it could be a mix of all these things. But the clarity matters, and it helps you pick the strategy that we're about to get into. And the strategy really depends on where you're at right now, just not just where you want to be. And like I said, inside our school group, we've got this quick investor DNA test that helps you figure out which strategy fits you best. It asks you some of these questions. How much cash do you have available? What is your goal? Do you need money now? Do you want to try and replace your income with passive income, things along those lines? And then it will actually give you a readout on what it feels like at this time the best strategy is for you. Some of you have already taken this in the group, and that's great. But all these that we mentioned today will be in that school group. So you drop us your email, we will get you that link to join, and also the links to these tools as we go forward. So let's jump in and talk about each of these strategies. Does anybody have any questions at this time? No. All right, cool. So the first one and the most common one is buy and hold. This is like the most proven and reliable strategy in real estate investing. It's not flashy, but it does work. The concept is pretty simple here. You buy a property, maybe do a little bit of renovations to it, hopefully not too much, but then you turn around and you rent it out, and then you hold on to it over time. When we consider something a buy and hold, it's usually 5 years or more. That gives time for appreciation. It gives time for principal pay down on the loan, things along those lines. And you're collecting that monthly rent income as you go. Your tenants are paying down the mortgage, and your equity is hopefully growing with appreciation. So on top of that, you're also gaining some major tax benefits in the buy and hold strategy. Things like depreciation. You've got write-offs for repairs that you're doing. You have interest deductions that you can take on the actual interest that you're paying on your loan. So that can help you with your W-2 write-offs, or if you're a 1099, it can help you write off some of that income that you're paying taxes on as well. So this strategy is really, it's ideal if your goal is to build wealth steadily and kind of create a foundation of financial freedom. It's where a lot of people start because they want to build that financial or that foundation. It's especially great for people who are okay with kind of a long-term view and want a relatively stable, kind of predictable return. So like I mentioned, my first investment I just showed you, and actually probably my first 5 properties were all buy and hold investments. And those deals really helped me get into the market. They helped me get my feet wet, which helped me grow and kind of fund several other deals that followed that. And if you really want to, if you see the link in the bottom, if you really want to dig into the numbers and you're evaluating rental properties, we have a calculator. It's more of a spreadsheet than a calculator, but it helps you actually calculate like the real cash flow from a single family property. So you'll run the numbers, potential rent before you buy it. It accounts for your reserves. It sets money aside for vacancies, your maintenance, your capital expenditures, things that a lot of landlords kind of forget when they're looking at the numbers. A lot of times they'll just take, what they're getting in rent and then take off the taxes and the mortgage payment and the insurance and think that that's cash flow. But if you're not setting those funds aside for maintenance costs and vacancies and stuff like that, a lot of times it turns into an unprofitable venture pretty quickly. So if you're focused on long-term wealth, this is a great place for you to start. The next one. So buy and hold is kind of the long game here. And these are more of your short-term plays. So flipping and wholesaling are fast-paced strategies designed to help you build capital very quickly. So if we start with flipping, this is when you buy a property, you renovate it, and then you sell it, obviously, hopefully for a profit, usually within a few months, hopefully, but a lot of times it kind of turns into 4 to 6 months. I've seen some take as much as a year, but we try and plan well enough and have our team of contractors ready to really knock these out in at least 6 months or less. But we always account for those kind of overages in the numbers which we'll get into in a later training when we break down our fix and flips. So you add value through your updates and improvements on that one. And then, you capture that value on the resale and you make the spread in between what you've put into the property, the acquisition costs, the renovation costs, the operating costs, which you have to calculate for the, utilities, the interest payments, things like that as well. And then you make the spread in between that. And then wholesaling is a little bit different. I don't have a ton of experience in wholesaling. I've done a few deals similar to a wholesale, but it actually used to be that a person with a real estate license was not allowed to wholesale. They said that if you had your client's best interest in mind, then and you could sell it for $20,000 more than they were willing to take it, then it's unethical for you to make money reselling the property after that. And then all this stuff happened with the NAR and the realtor rules that changed, and for some reason they decided that now you have to have a real estate license in order to be able to wholesale, which I don't know why that ethical piece kind of went out the window, or they decided that it was better that these transactions were being handled by people with licenses. So just a weird kind of rule change that they had. But the way wholesaling works is instead of buying the property, you actually find a good deal, you put it under contract with the owner, and then you take that contract and you assign it to another investor or another buyer for a fee. So basically, you make the spread between what you had it under contract for and what you sold it for to the new investor. You never actually buy the property whenever you're wholesaling it. You're just putting under contract and then assigning that contract, and you make the spread in between at the sale of the property. So it's nice if you have a big network, or if you can find that buyer, because you don't have the closing costs and things along those lines that you're typically responsible for when you do a sale or when you do a closing. So this way you're getting paid to bring opportunities to the table without actually having to do any renovations or come up with the full funding for it. And both of these strategies are ideal. Like I said, if you're looking to build up cash fast, I've seen people start in this category just to build up cash so that they can get into more of the buy and hold long-term investments or some of the bigger deals like multifamily. They do take more time and energy, especially in sourcing deals, managing the contractors if you're doing the flips, or coordinating the buyers, but they can generate pretty big paydays if you do it correctly. And, after I was comfortable in the single family market, I started to use both these strategies to build up funds I needed to get into more like larger deals, multifamily stuff, longer term investments. And they help me stay active, build a lot of relationships. So if you've got right now, more hustle than you have money, it's a good way to get started in that category. So this sector gets me pretty excited. I love multifamily real estate. We still do our single family stuff and buy and holds and fix and flips, but multifamily is it's one of the best ways to really kind of scale your portfolio. So instead of buying one door at a time with multifamily, you're acquiring multiple rentals basically under one roof, hopefully under a couple roofs, which gives you, more cash flow, more efficiencies. It's better long-term value. With multifamily, you benefit from what we call economies of scale, which means that, your maintenance, your management, your operation costs, they're all spread across several units. So if one tenant is going through an eviction or they leave, you have a vacancy, you still got some buffer there from the other doors that you have in there. It's not just sitting empty. You're not losing money, which makes it, more of a profitable kind of stable type of investment. You also have, like I mentioned, fewer roofs to deal with. You have fewer lawns to mow. You've got fewer driveways to maintain compared to owning the same number of single family homes. So if you had 20 units under one roof versus having 20 single family houses with 20 different heat pumps and 20 different yards, you can really kind of, keep your management under control there. So unlike residential units or residential loans, multifamily loans, which are 5 units or more, are often based on property performance, not your personal credit. So just because you have a lower credit score, the bank doesn't necessarily look at you as the only way to guarantee that this is a good property. They look at it more as like a business. So if this property is performing, at this rate, then we feel good about giving this loan to this person. Now, you do need to be, or at least partner with an experienced operator. That could be a property manager or somebody that's been in the game for a while. That usually helps kind of grease the wheels with the banks to get that funding in place. But the stronger the income, the better loan terms you can get. And that's why investors use multifamily to scale quickly, because it's all about the income. It's like running a business essentially. But with bigger rewards come bigger challenges as well. You'll typically need more capital up front. There's larger down payments involved, stronger reserves are required. And a lot of times, you need partners or other investors to be able to take down these deals. And like I mentioned, a good operator, especially if you're doing value add stuff. A lot of the stuff we've been buying, we're kicking homeless people out of it a lot when we buy them. So they need a lot of work. They need a lot of management day to day. But, we've had six-figure equity returns on some of the properties that we've done here just in our area. So, strategy overall, this strategy is great fit for people that want to build generational wealth. They're ready to treat, their portfolio like a real business, and they have the ability of their team to manage multiple units effectively. So if your goal is to scale and build wealth faster, multifamily is probably the next step for you once you get your feet wet. So the last one, and this list that we're going over is definitely not like all encompassing. It's more of a broad stroke of the strategies we have, and then there's kind of subcategories within each one of these. But one of the things a lot of people talk about is passive investing. A lot of people say real estate is passive investing, but that's couldn't be further from the truth if you're really doing it properly. But there is some things that are a lot more hands-off than others. And this is for people who want to invest in real estate, but really don't have the time, the energy, or the desire to manage tenants, their contractors, the day-to-day operations, things like that. And one of the most common ways and really easiest way to do this is through REITs. Those stand for Real Estate Investment Trust. They're basically companies that are income producing real estate companies. When you can buy shares in a REIT, most of them are publicly traded. So you're essentially buying into a larger portfolio of properties, and you earn dividends from the profits that they make through the management and sales and acquisitions and things like that. And you never have to actually manage anything. You just, watch your dividends come in. Then there, the creative financing strategies like rent to own, seller financing. With rent to own, tenants rent with the option to buy, which gives them a path to ownership. We've done this with our homeowner project. It's worked out pretty well, but it gives them a path to ownership and gives you stable income and reduced turnover. They're also responsible for all the maintenance involved. They pay the taxes. So, you're not getting calls in the middle of the night for people that, their toilets clogged up, things along those lines. And then there's seller financing. So on the other hand, that kind of lets you act as the bank. You hold a note, you set the terms, you collect the monthly rents. And, it's kind of another alternative to the traditional rental model. Another option, which is interesting and something that we've actually looked into on some of these multifamily deals and even our flips, is real estate crowdfunding. We've got a good company, group of guys up in Richmond that are running a company called Pocket Properties, and they're doing this on their platform. And the platform lets you pool money together from other investors to buy into larger deals with much lower capital requirements. So you don't have to be accredited when you do crowdfunding. And for anybody that knows what an accredited investor is, it's kind of hard to get to that point. So a lot of the deals that you have to be an accredited investor on aren't accessible to the kind of the mom and pop investors or people just getting started. But these passive strategies, they're perfect for people that want to diversify. They've got limited time and they prefer to invest rather than really operate or try and be hands-on. kind of like more like what we are. I'm a little bit of a control freak when it comes to our real estate. So I like having the control, but once you have enough capital or, like you said, just time, you don't have it. These are some good strategies to look into for that. So those are the main categories. And like I said, in later trainings, we'll do these at least once a month, potentially twice a month here moving forward. We're going to dig into, each one of these more specifically, talk about how to find the deals, how to fund the deals, how to manage and execute on these types of deals, and really kind of dig into each one of these categories. But how, at the end of the day, how do you choose the right strategy for you? And it comes down to, a lot of times three factors: the capital, the time involved, and then your risk tolerance. So I'm going to break those down for you quickly here. Your buy and hold strategy requires more capital up front, depending on if you're house hacking, that type of thing. The time is kind of moderate, especially if you've got a good property manager in place. And it's relatively lower risk because you have multiple exits. Everybody needs a home to live in. So there's always somebody that's looking to buy it or rent it from you. Flipping kind of takes medium capital. This is dependent on how you set your financing up. There's, some people that we work with that have, you only need 10% down on the acquisition cost, and they'll give you 100% of the construction cost. There's some out there that do 100% of both. So you can get into flipping with lower capital, but it's safe to have kind of medium capital reserves. It takes a lot of time though, so it's very hands-on. You're managing contractors, you're managing schedules, you're managing materials, and it's very high risk because you've got a lot of money invested in this thing. If it doesn't sell at the price that you want, then your margins can vanish pretty quickly. If it doesn't sell at all, then you're kind of sitting on this property. So there's a lot of capital going into it from either a loan standpoint or out of your pocket, which makes it a little bit higher risk. Wholesaling is very low capital needs. It's probably the lowest, which is why so many people are drawn to it. But it demands a lot of your time. And I would say risk level, we have medium on here, but I would say it's fairly low. Because if you don't find somebody within the time that your contract expires, then you don't own the property yet. So you're not sitting there with the real estate. You might have like an escrow deposit that you lose, something like that, but you're not going to be left holding the bag, owning a property you don't know what to do with. Multifamily requires very high capital. That's why you see a lot of people pooling their money together. It's medium to high time commitment, depending on whether you're a GP or an LP, or what the strategy is with the multifamily market. And it's fairly moderate risk. I mean, like we mentioned, it's treated like a business as long as things are operating correctly. It's not a super high risk thing, but there is more capital involved, so the risk is pretty is fairly medium on that. And then your REITs and your passive strategies, these are very low time commitment. Obviously, very low capital. You can buy these on the NASDAQ and stock exchange and things like that. So with as little as $100, you can buy into a REIT. It's zero time required, really, other than to actually buy the stock, and maybe check your dividends and their investor letters. And then the risk is also low because these are publicly traded companies. They've been doing this for years and years and years. They've got a full corporate team of operators that are running these projects. Now you can get into some risky REITs based on the category that they're in. I know there's I found some marijuana farm REITs in the other day. So it's like, they're buying into real estate that grows indoor marijuana. And it's like, all right, that's an industry that could easily, have a new president or some sort of regulation around it and kind of go under. So, based on your risk tolerance, you kind of want to be aware that of what the REIT is doing. So in conclusion, your current situation here really plays a big role. And it makes it easier to identify, if you know your goals, which criteria this fits. So, you've seen kind of the different paths that you can go down. Now the question is, which one do you pick? And the answer really depends on kind of where you're starting and what you're aiming for. That's why your first step is always to kind of assess your current resources. How much capital do you have? How much time can you realistically commit? What level of risks are you comfortable with? And then from there, you can start to match your situation to your goals. Are you focused on cash flow? Do you need quick profits? Are you trying to build long-term wealth and net worth? And each of those strategies kind of serves a different purpose. So the right one depends on your priorities now. And then next, remember, it's okay to start small, learn as you go. That's definitely what I've done. That's what most real estate investors that you hear that are out here, mega moguls now, like they started small. So you don't need to go big on your first deal. Pick something that's manageable, build your confidence, learn the process, and then start to scale it from there. And then again, most importantly, be willing to really adapt and evolve based on the market. Your life changes, the market changes, your goals will shift, your why will shift, as things happen in your life. So just take the strategy, that fits you best. The one that you start with may not always be the one that you stay with forever, and that's perfectly okay.